I'm going to explain why I like to trade a variety of different time frame charts as a Forex trader. So let's get into that and more right now. Hi traders, Andrew Mitchem here, the owner of the Forex Trading Coach, video and podcast number 301. And I'm going to explain to you the importance of why I believe it's very important that you trade a variety of different time frame charts as a Forex trader. You see, different Forex pairs, different currencies have different personalities, and they all move in different kinds of way. You know, some are very fast moving, some are very slow moving, a little bit like people in some ways. And the danger is if you rely just on either one currency pair or, more importantly, just one time frame chart, then you could be limiting the available trades that you see. And different pairs have different months of the year or different days of the week or even different hours within a day that are better or worse for the different currency pair. And the problem is let's say you just traded the 4-hour charts, let's say. The problem is what happens if the 4-hour charts that particular day or that week are either very volatile and they're moving like way too fast, or they're very quiet and they're just dead. The problem is you're missing out on so many potential opportunities on other time frame charts, because you might find that the 4-hour charts that week that you trade them, they just don't show very many possibilities. And so with the standard MT4 account, the main trades or the main time frames that I trade myself are the 4 hours, the daily, the weekly and the monthly. And that's good, but what I've done is I've developed some software which I give to my clients as part of my coaching course that allows us to trade other time frame charts on the MT4 platform. And we trade especially the 6-hour, the 8-hour and the 12-hour charts. And depending on the week, for instance, last week, the 12-hour charts showed some fantastic trade setups. This week, the 4-hour charts have been showing some really good setups. And it's all depending on the nature of the market at the time. The problem is that you don't know in advance what this next week's going to show us. You know, what's going to be the best time frame to trade. You don't know. And so when people come to me and they say, Andrew, what's the best time frame chart I should trade? And it's like, well, it depends. And so there is no one answer that's correct. It depends on the market at that time. So that's why I like to look at a different variety of time frame charts. But the beauty of it is it doesn't mean to say that you're spending a great deal of extra time trading. You see, when the daily charts change over at 5 p.m. New York time, at the same time, I can look at the 12-hour, the 8-hour, the 6-hour and the 4-hour charts. And so I'm looking at the daily charts anyway at that time. So for an extra maybe 10 minutes, I can scan through those other time frame charts and look for different trading opportunities. And that's the beauty of it. And as mentioned, this particular week right now, 4-hour charts on our forum site have gone absolutely crazy. There's all sorts of different 4-hour charts setting up. Last week it was 12-hour charts that were showing the best trade setups on that week. Why? Well, it's just the different nature of the market as opposed to last week, as opposed to this week. But the point of this is to say, if you want to give yourself the best opportunity, try and look at more than one time frame chart. Because just relying on one, you may be cutting yourself short and not giving yourself the best opportunity. The beauty of the way that we trade, the way I teach and the way that we trade, is that the same principle, the same approach, the same setups, the same what we're looking for entry and exits are identical regardless if it's a 4-hour time frame chart or a weekly chart. It doesn't matter. The patterns are the same. The way that we're entering and exiting is exactly the same. So it's just a case of scanning through different charts. But of course, because we're only looking at a trade or a potential new trade at the close of a candle, you know exactly when you need to go and look at your charts. And so that's the beauty of trading that way. The other thing that we find extremely beneficial is because we're looking at those 4-hour charts and above the majority of the time, the reward to risk is so high on those trades. So you don't even need to get a 50% win rate. You can be even lower and still be making exceptionally good returns because our reward to risk is so good. And that's another advantage of trading those slightly longer time frame charts. Less chart time, less stress, news doesn't really matter. Reward to risk is so much better. Spread becomes almost insignificant, and you put the trade on, you know your entry, you know your exit levels, let the market do its thing. So I hope that helps. Try and get yourself into that habit of looking at 2 or 3 different time frame charts throughout the week to give yourself the best trading opportunity. So once again, this is Andrew Mitchem from the Forex Trading Coach. Any questions, just send me an email, andrew@theforextradingcoach.com. See you this time next week.